Hello everyone, welcome back to the channel. In today's video, we are going to analyze a Nifty 50 trading session where I identified a potential setup using the EMA structure and price action. The interesting part of this trade was the entry. Instead of chasing the price, I waited for the market to come back and touch the upper EMA line. Once the setup was confirmed, the trade was taken with proper risk management and a target-to-risk ratio of 1:2. So, let's go through the complete trade step by step. And remember, this video is purely for educational purposes and not a recommendation to buy or sell any security. Before taking any trade, the first thing I look at the overall market structure. Here we are looking at the Nifty 50 chart. The first thing we need to understand is whether the market is trending or moving sideways. In this session, I was particularly interested in the EMA structure because it was helping me understand the short-term direction of the market. Rather than entering immediately, I waited for the price to come towards the EMA. This is very important. A lot of traders make the mistake of entering after a strong move because they don't want to miss the opportunity. But my approach here was different. I wanted the market to come to my setup instead of chasing the market. Now let's focus on this particular area. You can see that the price is approaching the upper EMA line. This is where I started paying close attention. The EMA acts as an important dynamic reference point in this setup. So I waited for the price to touch the upper EMA and take in the trade. Once the conditions of the setup were satisfied, the trade opportunity became much clearer. This is the exact point where I decided to take the trade. Here is the entry point. The important thing to notice is that I did not enter randomly in the middle of the move. I waited for the price to come back to the EMA. That gave me a defined area for the trade. Once the entry was triggered, the next question was, where is my stop loss? And more importantly, where is my target? This is where risk management becomes extremely important. Before entering the trade, I already had a predefined risk and reward. The target was set at approximately 1:2. That means for every 1 unit of risk, the planned reward was 2 units. So instead of thinking about how much money I could make, the focus was on executing the setup according to the predefined plan. Now let's watch what happened after the entry. Initially, the market started moving in the expected direction. At this stage, one of the biggest challenges for a trader is controlling emotions. Once you enter a trade, you may see the price move slightly against you. You may also be tempted to close the position early when you see a small profit. But this is exactly why having a predefined trading plan is important. The stop loss was already defined. The target was already defined. So there was no reason to make an emotional decision in the middle of the trade. I simply allowed the trade to develop according to the original setup. And as you can see, the price continued moving towards the target. There are a few important lessons from this setup. Number 1. Don't chase the market. If the price has already moved significantly, wait for a better opportunity instead of entering because of FOMO. Number 2. The EMA is a tool, not a magic signal. A simple touch of an EMA doesn't automatically mean that we should enter a trade. We need to consider price action, market structure and momentum together. Number 3. Always define risk before entering. Knowing your stop loss and target before entering the trade makes it much easier to control emotions. And finally, focus on consistency rather than one winning trade. A single trade doesn't prove that a strategy works. What matters is how the strategy performs over a large number of trades with proper risk management. And here we have the target. Just book the target here due to support area. The trade reached almost the predefined target. So the important thing here isn't simply that the target was hit. The bigger lesson is the process behind the trade. First, identify the market structure. Second, wait for price to reach the EMA area. Third, wait for confirmation. Fourth, define the risk before entering. And finally, allow the trade to reach the planned target without unnecessary interference. That's the complete process behind this trade.